So if you're somebody who ends up buying the top of the move and you end up getting stopped out just to see the stock reverse and go the opposite direction, this video is going to be for you. So I know everybody loves to think that stocks only go up. However, stocks are going to make a retracement, which is going to give you a much better risk to reward, so a better entry to enter your trade. Therefore, if the stock does go against you, it's going to be less of a loss. However, it's going to give you the best entry possible, and you can find those entry points by using Fibonacci retracements. So if you're on Thinkorswim, if you go to this percentage sign right here, this is going to be your Fibonacci retracement. So now if we go to the monthly time frame on the SPY, essentially what you are going to do is you are going to take the low point, so the lowest point before the move occurred, and you're going to draw it all the way to the top of the move. Now you're not going to know this is the top until, you know, the stock you're trading or whatever you end up trading ends up pulling back. But anyways, we can see on SPY that this is clearly the top. So now from here, what you want to do is you want to go to edit properties, and you want to make sure that you are using 0.382, 0.5, and 0.618. You can take everything else off, and these are going to be the most common retracement points. Now in an extended uptrend or an extended downtrend, that 23.6% Fibonacci retracement does have some importance. So if we're looking at SPY, we can see that it tested as support 1, 2, but once it finally lost it continued to come down. But yeah, from there, the most common retracements are going to be 38.2%, 50%, and then 61.8%, with the 50% retracement and 61.8% retracement being, I would say, the one that the stock ends up reverting to the most. Now from here, it's not as simple as, oh, this thing made a full 50% retracement, let me end up taking a trade, because in reality, you don't really know that the stock is going to bounce at that retracement point. You also need to piece it together with other things like moving averages, the stochastics, and whatever other indicators that you like to use. But yeah, like I said, 38.2, 50, and 61.8% are going to be the most common retracements. So now if we go back to SPY, but now on the daily time frame, say you were somebody who didn't want to end up buying SPY at the top of the move, have it end up pulling back against you and getting stopped out just to see the thing continue to go back up, what you could have done this entire time was to use Fibonacci retracements. So if we're looking at SPY, here's the low of the move, and then here's the high of the move before it started pulling back. Well, if you want to look for a proper entry, again, take the low point to the high point, and what ended up happening with SPY, it made a 50% retracement and then came right back up above the moving averages. To me, this would be a buy signal, and as we can see, SPY continued to push up in price. Well, what did it do here? It set a new low, and then it ran all the way up to this high. What do we see with SPY? It dropped right back down to the 50% retracement yet again, and then continued to go back up. Now again, I wouldn't simply just buy it because it made the 50% retracement. I would personally wait for it to come outside. So if you did end up buying it here, you would have probably been stopped out, but you can always get back in because as we can see, SPY continued to push up. Now again, if we take this low point to this high point, yet again, it made a 50% retracement and then broke above the moving averages, which is partially where I would have entered. And as we can see, SPY continued to push back up in price again. If we take a low point yet again, and then bring it to the high point, SPY ended up making a full 61.8% retracement, breaking back up above the moving averages, and then continuing the trend yet again. Well, let's take this low point to this high point. What ended up happening? It made a 38.2% retracement, went back up above the moving averages, and then it continued to push. Now here's the thing about Fibonacci retracements that is going to be very important to know, because a lot of people ask, what happens if it breaks on the opposite side of the 61.8% retracement? At that point, it's probably not a retracement anymore. So this is actually a trade that I ended up taking on SPY majority because of this doji right here. However, what added even more confirmation was if we take the low point to the high point, notice what happened. It bounced off the 61.8% retracement 2 times, but this day it closed below it. So if it closes on the opposite side of the 61.8% retracement, it is more than likely not a retracement anymore. And what ended up happening with SPY, it gapped down from 440.62 all the way down to 436.66 was the high of the day. However, the low of the day was all the way down here at 429, which was an 11-point drop. So keep that in mind when it does come to retracements. Again, if it closes on the opposite side of the 61.8% retracement, it's more than likely not a retracement anymore, and it's more than likely going to go the opposite direction. As we can see, SPY dropped a significant amount. Well, guess what? If we take the low of this move, because as we can see, low point to high point, what ended up happening with SPY, it made a 50% retracement, bounced off 1, 2, 3 times, and then rallied to set a new high. Well, again, what do? High point, low point. Yes, it came below the 61.8% retracement in this scenario, but it did not close below it on the daily time frame. Tried to push up, set a lower high, and then as we can see, SPY ended up dropping significantly. Now, with Fibonacci retracements, you don't only have to use it to the upside, you can also use it to the downside. So as we can see with SPY, it ended up dropping a significant amount. Same thing to the downside. The most common retracements are going to be 38.2%, 50%, and 61.8%, with the 50% and 61.8% being the most popular. But if we take the high, the all-time high SPY at 479.98, all the way down to this low right here, what ended up happening with SPY? It made the 61.8% retracement once, twice, 3 times, and then dropped all the way down to a low of 410, which we recently broke below. Well, what if we do it again? High point, low point, made the 61.8% retracement, dropped, and then set a higher high, tried to push back up, couldn't really hold, and then it dropped yet again. Well, let's do it here. High point, low point, made the 50% retracement right here, and then it dropped and set a new low. Let's try this high point to this low point. As we can see, came into that 50% retracement, and then it started dropping significantly, and now we're setting newer, lower lows. Now, you can use Fibonacci retracements on multiple different time frames. You can use it intraday, like a 5-minute, 10-minute, 1-minute, 1 hour, 4 hour, really whatever time frame you trade, you can use a Fibonacci retracement. So let's actually see today. Let's try it from here to here. Let's see what we end up getting. As we can see, SPY made the 61.8% retracement on the 5-minute, denied it once, 2 times, 3 times, and now it's all the way down here at 396.55. But yeah, that's gonna wrap up how to use Fibonacci retracements. Again, I'm gonna make multiple different parts of this video, so if you guys do want to see those, make sure to comment down below. But if you guys did enjoy the video, make sure to click that like, as well as clicking that subscribe and that bell icon. It would mean the absolute world to me. Everybody have an amazing rest of your day, and I'll see you guys in the next video.